There you go.
So I led a course at OLLI, that's the Osher Lifelong Learning Institute, which I guess all of you are familiar with. I led a course in tax policy. It was 12 hours of course over the course of one semester, and I'm going to distill 12 hours in this 30 to 45 minute talk. Either I talk very fast, which I can't actually do, or I kind of just hit the high points. And that's what I intend to do. So when it comes to tax policy, when it comes to the government, there are three big questions. The first is, what are the proper functions of government? And of course, the political body debates that endlessly, and that's above my pay grade. Then the next question Congress or the decision makers have to decide is how much of what we decide we want to pay for, how much do we pay for currently, and how much do we borrow to be paid by future generations? And the third and biggest question from the perspective of tax policy is, okay, we now know how much we're going to try to collect to pay for the functions of government that we've decided we want. Who pays? And at what point do they pay? And that's tax policy. So if you ask people, are your taxes fair? Do I pay enough? Do I pay too much? A lot of people will say, oh, I pay too much in taxes. We all pay too much in taxes. But actually, if you look at the record, if you look at the 38 members of the OECD, which is an international organization of developed countries, it stands for Organization for Economic Cooperation and Development. There are 38 developed countries in the OECD. And if you compare the United States tax burden with those of other countries, we're actually on the low end. Among those countries, we are seventh from the lowest in terms of how much taxes we pay as a percentage of our gross domestic product. So we're actually on the low side. But nonetheless, we do have government services that we all want to pay for: defense, Social Security, fire prevention. All these things, we need taxes to pay for them. So what's a good tax? A good tax has four hallmarks. One is it raises enough revenue. Secondly, it's fair, whatever that means. Third, a good tax is easy to administer. And fourth, it doesn't adversely impact the economy. Now, frequently, these characteristics are at war with each other. When you try to do something that's fair, often you result in great complexity, which is not easily administered. So the characteristics you want to see in a good tax, you can't get it all. So it becomes an important question as to what's important to you as a voter. Is it fairness? Is it impact on the economy? What's important to you? And when it comes to fairness, what does that mean? Well, we'll come back to that in a minute. Here in the United States, we see taxes levied at many different levels of government. Of course, there's the federal taxes. That's the highest portion of our tax bill. And then it's taxes are levied by the state, by the county, by a city, by a special purpose district sometimes. If any of you live or have ever lived in a condominium, you might think of your homeowners association fees as a tax levied by your condominium. So taxes are levied at many different levels. And there are a lot of different types of taxes. We have in the United States, we're all familiar with the personal income tax. There's also a corporate income tax. A big tax in the United States are wage taxes, Social Security and Medicare taxes. For many people, that is the biggest portion of their taxes. We're familiar with retail sales taxes. Every time you buy something, the state or sometimes the city levies a retail sales tax. Most states have that. You might see in other countries, you do see something called a value-added tax, which is a lot like a retail sales tax, except instead of all the tax being collected at the time the consumer buys a product, with a value-added tax, tax is collected at every point in the chain of product. So as the product gets raw materials are brought in and manufactured, there's a tax levied at that point. When the manufacturer then takes those raw materials and sells something to a distributor, it's levied at that point. When the distributor sells to the retailer, a tax is levied at that point. And so each step in the chain, a tax is levied on the additional value added by that step. And the reason you see a lot of countries adopting a value-added tax is that it's much more easily administered than a retail sales tax. Of the 38 developed countries in the OECD, 37 have value-added taxes, and the United States is the only country that does not. But we do have retail sales taxes in most states, so we have a similar tax, but not an identical tax. I think it makes sense at some point for the United States to adopt a value-added tax, allow the states and cities to piggyback onto that, and do away with the highly inefficient retail sales taxes that we're used to. Sometimes there are wealth taxes. It's not a tax on income. It's not a tax on inheritances. It's a tax on just the wealth that you own. Now, we don't have in the United States a general wealth tax, but we're all familiar with real property taxes, which is a form of wealth tax. Just by owning something, each year you pay some percentage of its value in taxes to your local jurisdiction. We have in this country estate taxes. Estate taxes, however, that are only imposed on really the largest estates. Currently, we have an exemption of roughly, I think it's $13 million per person before a tax is levied as an estate tax. So most of us won't have to worry about that. For the few of you that do have to worry about it, I congratulate you. Occasionally you'll see, but not too frequently, what's called a poll tax or a head tax. In other words, same dollar amount is levied against each person. It's not a percentage of your income, not a percentage of your wealth, just everybody pays the same dollar amount. You don't see that very much because I think most people just don't think that's just not fair to levy the same tax on everybody, whether you're wealthy or struggling. In fact, it was attempted in the UK during the Thatcher administration, and it was so unpopular, it led to her being ousted as the head of her party. Poll taxes are just, it seems like, in concept, it seems fair because we all enjoy the same level of government services, but in practice, most people just don't think it's fair. One of the challenges to tax reform, well, let me step back a second and say what I mean by tax, or say a word about tax reform. I really don't like the words tax reform because reform implies, oh, I'm fixing something that's broken. But what one person thinks is broken, another person is going to think, oh, this is just the way it ought to be. So reform is just a way of couching doing what you want to do and saying it's for the good of the public when it might not be for the good of the public. But anyway, our tax code isn't perfect, far from it. And so there's plenty of room for reforming the tax code. But there are challenges, especially in a democracy, because you want to do one thing, your neighbor wants to do something else. there has to be compromise, and compromise is frequently inefficient, doesn't actually fix anything to anybody's satisfaction. It's just a way of getting crawling towards a better system. And frequently, unfortunately, the big focus when Congress talks about tax reform, the big focus is always on who are the winners and who are the losers. And that really shouldn't be the focus. The focus should be on, well, here's a provision of the tax code that is unfair or unadministrable or just too complex for words. Let's fix it. Well, whenever you fix something, there's going to be winners and losers. And no matter how bad a provision of the tax code is, it always has some constituency. Somebody benefits from that provision. And so it's very difficult to make our tax system better. Another thing that's difficult in a democracy is the impermanence of tax reform. In 1986, Congress passed the 1986 Tax Reform Act, which was a pretty good law. I would say in my years of being a practitioner, it was probably the best law I saw passed dealing with reforming the tax code, was the 1986 Tax Reform Act. And it didn't take too long before all of the benefits of that law were eroded by future Congresses, undoing provisions one at a time. What the 86 Tax Reform Act did was to broaden the tax base and lower tax rates for everybody and eliminate a lot of loopholes and special preferences. And over time, loopholes, preferences were continuously got added back into the tax code and undid all of the good work of that Tax Reform Act. Another thing we find in a democracy is that our congressmen like to hide the benefits they confer on different activities or people in the form of tax expenditure. So you will see that Congress will not frequently vote in favor of, let's say, vouchers for helping people buy a house, but they will vote for tax preferences that indirectly help people to buy a house, the deduction for interest on mortgage, that sort of thing. So what they do is they hide expenditures in the tax code that's politically acceptable, but they don't want to see those expenditures spelled out in the budget. They don't want to see direct subsidies to people to enable them to buy houses. They'd rather have indirect subsidies through the tax code. I'd like to say a word about the history of our federal income tax. It's probably the tax that most of us are most familiar with. So there was an income tax during the Civil War years to help pay for the Civil War, and it terminated in 1871, but then was reenacted in 1894. Why? Because the income tax was considered to be a much fairer approach to funding the government than what was prevalent at the time, which was tariffs, excise taxes, real estate taxes. That was the primary source of funding for the government. Income tax was considered to be a fairer approach, but it was found to be unconstitutional. So the Constitution was amended and the income tax was reenacted in 1913. And that's the tax we have today. At the start, the initial income tax rates ranged from 1% to 7%. And over the years, those, particularly during World War II, income tax rates got higher and higher and higher. They reached a high of 94% during World War II. And they were about 70, the top rate was about 70% until the Reagan years, 1980. And then it dropped to 50% and then gradually diminished to at 1.39.6%. And then with the 2017 Tax Act, during the Trump administration, it was reduced to 37%, which is what we have today. 37%. But interestingly, very interestingly, the way the 2017 tax law was enacted, the tax reductions that were in there were only put in place for 10 years due to arcane Senate rules. That was the only way to get the law passed. So what happens is in 2026, the old law just kind of snaps back in place. So the 37% that was enacted as the top rate is going to go back to 39.6% unless Congress does something. So 2025 is going to be a very interesting year from a tax policy perspective, because now we have, hey, there are some people who want to raise taxes, other people who want to cut taxes. They're going to have to reach what I think is a reasonable compromise, because I think will be a reasonable compromise. I don't know what it's going to be, but it will probably be more reasonable than the approach that either side would adopt if they had all the power to do it. It'll have to be a reasonable compromise, because if the tax cutters don't do something reasonable, the people who want to see, let's say, a more balanced budget will say, oh, we're not going to vote for that. Now, it would be even better if at least one House of Congress or the White House was held by the opposite party. But the Republican Party, who tends to be the tax cutters and the government service cutters, they hold the two houses of Congress and the White House. But even within the Republican Party, there are the fiscal hawks who don't like to see high taxes, but even less like to see high deficits. So there is going to be some give and take, not as much as there would be if the Democrats held one of those three branches, but there will be compromise, and it'll be interesting to see where it all comes out. So what did the 2017 Tax Act do that that is going to go away in 2025? Well, it lowered individual tax rates. So if nothing else is done, those will go back up again. It lowered corporate tax rates as well, but interestingly, the corporate tax rates were a permanent provision of the 2017 Tax Act, whereas the individual tax rates are the ones that go away in 10 years, i.e. In 2026. But the lower corporate tax rates are permanent. So it'll take an act of Congress to increase those again, if that's to be done. One good aspect of the 2017 Tax Act was a significantly higher standard deduction. And what that did was it made it a lot easier for the majority of taxpayers in this country to file their taxes, because you no longer have to be concerned with deductions and all that. You can just use the standard deduction, and that's greater than itemized deductions for a much larger percentage of the population than was the case before 2017. So that's a provision I particularly would like to see retained, the higher deduction. In exchange for this higher standard deduction, the 2017 Tax Act eliminated the personal exemptions and dependency exemptions. And so those will come back. Another thing that will come back, unless Congress does something, is there's this arcane phase out of the benefit of personal exemptions. This was the case before 2017. And that phase out amounted to like an additional hidden tax bracket. And so you can think of it as 1 percentage point of a hidden tax bracket. So that'll come back unless something is done to correct it. Another provision that will go away is one I particularly don't care for. For people who have pass-through businesses, small businesses, where the individual owners pay the tax on the business's income. For any of you who have a small business, you're probably familiar with the concept of an S corporation or limited liability company, where the owners or owner pays the tax on the business's profits. Well, the 2017 Tax Act added a 20% deduction for this pass-through income for small businesses. What that means is business income, small business income, is taxed 20% lower than other forms of income like wages or interest, which strikes me as being kind of unfair. Why should one form of income be preferred over another? Which gets to the question of fairness. I think one thing we would all like to see is fairness in our tax system. The one thing none of us can agree on is what that means. As taxpayers, we're all entitled to our opinion as to what's fair. One big question in the realm of fairness is it fair to have progressive income tax rates? From the inception of the income tax, we have always in this country had progressive income tax rates. That progressive meaning low income people pay at a lower rate. As your income gets higher and higher, you pay at a higher rate on additional income. Is that fair, or is it more fair to be to have a single rate that applies to all income? A lot of people and economists make the argument that a single rate applicable to all income is fairest of all. Nonetheless, from its inception, we have never had that. If you look at the countries in the OECD, the Organization for Economic Cooperation and Development, if you look at all those developed countries, all of them have an income tax, and all but one or two have progressive income tax rates. So there seems to be some kind of consensus out there in the world that graduated income tax rates are the fair way to go. When I asked that question of the classes I've led, the students in the classes, universally, everyone has said, yes, graduated income tax rates are the way to go. Nobody argued in favor of a flat single rate. Maybe somebody on this call thinks that's a better approach. You have the right to say that. There's two main aspects of fairness that need to be highlighted. One is that you treat people who have similar economic circumstances the same. They call that horizontal equity. And there's this other thing called vertical equity, which the concept is those who have more pay more. I mentioned the possibility of a poll tax. I did sort of a back of the envelope calculation. What if we had a single dollar amount that everyone pays the same? Between the federal budget and the District of Columbia budget, it works out to about $25,000 per person. So every man, woman, and child in the entire country, or at least in DC, would pay the same $25,000, whether you're as rich as Elon Musk or struggling to get by. It's the same amount. So you can see that in a sense that's fair, but it's totally unworkable, and nobody would vote in favor of that kind of system. I mentioned the desire for our tax system to be easily administered. there are a couple of issues that come up when you think about administrability. One is complexity. You don't want the tax system to be so complex that it takes you have to pay a return preparer to prepare your tax return. But guess what? That's what we have. We have an income tax that is so complex that the average person just can't really know very easily what their tax bill is. I'm a professional. I was a tax lawyer for many years, and I have to pay TurboTax to send me a program that quizzes me. It's almost like artificial intelligence to enable me to do my own tax return. It's a complex system. Another thing you want is that the tax system is not conducive to tax evasion. You want a system where it's easy to enforce people to pay their fair share of taxes. An interesting little story. At one time, you would write the name of your dependent on your tax return, state their age, and you would get a dependency exemption for it. Then Congress kind of wised up and said, you know, let's make sure that this person that you're claiming a dependency exemption for actually exists. So we'll require you to put in on the tax return the Social Security number of a person you claim as a dependent. Well, guess what happened? In 1 year, 7 million dependents disappeared. Now, it may be that some of those 7 million, they weren't listed because maybe the parent didn't get their kid's Social Security number in time or whatever, but I'm sure the vast majority of the 7 million people just never existed. So having a little bit of backup is good for the system. Another thing is withholding and information reporting. So studies have shown that where there is withholding and information reporting, as when you get wages, when you're paid your salary, your employer withholds and you get a W-2 at the end of the year, there is like 99% compliance. The tax gap for wage income is only 1%. But where there's no withholding and no reporting, for example, a small cash business, estimates are that there's a 63% tax gap. That is to say, 63% of cash income where there's no withholding or reporting just never gets reported. That's an estimate. So what I would like to see is a greater information reporting, greater withholding. For example, some countries, when a bank pays you interest, there's withholding at that point. A percentage of the interest gets sent to the government. I'd like to see a little bit more of that. But there's a tension between enforcement, which we'd like to see enforcement, but intrusion. We don't want the IRS peeking under our beds. And where you come out on that is differs among different individuals. Would you rather see more enforcement, or would you rather see less intrusion? Another thing that you want to see in terms of administrability is more of the tax collected at a more sophisticated level. Think again about retail sales tax. That is collected by hundreds of thousands of small retail businesses and sent to the government. It would be much more efficient if we had a VAT tax and the tax was collected from big manufacturers than it being collected each and every time you go to the store and buy a pair of shoes. The tax gets collected at that point. It would be much better if it got collected all along the chain of the manufacturer of those shoes. More of the tax would get paid. We talked about fairness and we talked about administrability. And the other thing we'd like to see in a good tax system is it doesn't have a real adverse impact on the economy. Problem with that is nobody knows. Every economist has an opinion about what form of tax is better in terms of goosing our economy, what form of tax is worse. You'll see a lot of economists advocating for consumption taxes, more sales taxes, more VAT taxes, and less income taxes. They have reason for advocating for that. But in my view, two things. One is nobody really knows how badly a given tax impacts the economy. Does it how badly does, say, an income tax impede the economy compared to a consumption tax? Nobody really knows. Economists all have opinions, which amounts almost to religious dogma as to what is better for the economy. But there's no way of ever really knowing. You can't do experiments on taxes and figure out how economies are impacted. I will say that countries that have a lot of countries that have high tax rates, including high income tax rates, have very strong economies. I'm thinking of Denmark. Of all the OECD countries, Denmark has the highest rate of tax per GDP, gross domestic product, and yet it has a pretty enviable economy, a pretty strong economy. So you can't really, you can argue, but you can't really prove that high taxes or high income taxes impede the economy. We all know that taxes affect the economy, but nobody knows really how they affect the economy. You know, I think at this point, I have summarized everything I would like to summarize about tax policy. And if any of you has any questions, I would love to hear it.
Wow, that was pretty impressive that you were able to put all that in such a great summary. Thank you.
Yeah. Well, when I was giving the course, we were able to have back and forth, and everybody in the class could express their opinion. And I would love it if some of the people on this call would express their opinion about these things.
I agree with you. And so just as a reminder, Tony, I see your hand. I'm going to ask you to unmute.
Okay, so I can ask a question?
Absolutely.
All right. Well, one thing you haven't really talked about is enforcement with the federal income tax anyway, or state enforcement by the tax people. And is it true that if you analyze what the federal government does in terms of what's the term, checking on people's tax things, that they have a tendency to go into a sort of they don't hit the really complicated taxpayers as much because it's just so complicated. They may lose anyway.
Yes, it is true.
It is true.
Yeah, the good news is that in the Inflation Reduction Act under the Biden administration, there was substantial additional funding for the IRS to audit businesses and people that didn't routinely get audited in the past. That's the good news. The bad news is there are people in Congress who don't like that. They feel like it's more intrusion than anything else. I personally feel like it's not intrusive. It just comes with being a citizen that your tax return might be audited. But yeah, it's true, and especially in the area of partnerships and limited liability companies, they just did not get audited at any great rate. And now there's money to do it, but there are voices in Congress who are being somewhat successful in getting that money reduced, which makes no sense to me. Makes no sense to me.
And a lot of that money, I believe, is going into updating their computer systems. I hear from my sources in the
I have noticed over the years that their computer systems have gotten better. There is much greater matching of the information reports that your bank and your brokerage firm and your employer give, and matching that with what you report on your tax return and catching omissions, much greater rate.
Thank you.
Yes.
Are there other questions?
Sid
I
has his
see.
hand up.
Yes, I see. Sid, you just muted yourself.
There you go.
Now, unfortunately, the way Congress plays games, that multi-billion-dollar amount for the IRS, I suspect was an authorization. The money actually has to come each year as Congress votes on the budget. And you know who's in control now and their attitudes towards the whole tax system. It's very dismaying that the IRS is not likely to be permitted to conduct the efficiency and overhaul that was designed for it.
Yeah. I hope you're wrong, but you might be right. It's definitely true that a dollar spent on additional dollar spent on IRS budget will bring in more than a dollar of additional revenue. So anyone who's looking at it objectively would say, yes, let's do this. Let's update the systems. Let's increase the audit rate. Let's give better training to our IRS agents. That makes all the sense in the world, but there are members of Congress who don't like the income tax, and as a backdoor way of reducing it is allowing more tax evasion by reducing the IRS budget. Makes no sense to me.
Are there any other questions?
Yes. Okay, I'd like to raise the larger question. I'm all in favor of higher taxes on the higher income, higher taxes on us, perhaps the upper middle income. But I'm not quite sure what the proposals would be from the progressives to make that happen. Was it just a percentage, or is it something a little more sophisticated?
Well, I think you see a whole range of proposals. Some of the ones that have gotten the most vociferous support have been higher earned income credits and child tax credits, refundable credits. So a refundable credit is you get it whether you owe tax or not. And that's it's just using the tax system to fund what amounts to a welfare payment. And I would like to see, and there are other people in Congress that would like to see higher refundable tax credits for children, because the child tax credit became a significantly effective anti-poverty program. And it was a shame. It was only temporary. It was a shame when it was reduced after the COVID pandemic. And it would be great to see it reinstated. But is it going to happen? Not during the next 2 years. I don't.
I agree with you. That's certainly one way.
Yeah.
But I'd also like to see those of us and those above us hit a little bit harder. And I'm not sure what proposals are out there for that.
Well, there's no dearth of proposals. There's plenty of proposals. It's what is going to get a fair hearing in Congress, what's going to get enacted. The only source of optimism I have, for at least for the next 2 years, is that on the Republican side, there are some fiscal hawks who don't like taxes. They don't like a lot of the government services that we have, but they mostly don't like deficits. And so that we might see them step up to, I won't say increase taxes, but avoid reducing taxes.
Interesting. Michael, I see your hand. Michael Houston, who very kindly arranged this program.
Yeah.
Oh,
Yes,
hello,
thank you.
Michael.
Thank you very much, Martin. Appreciate your presentation. Is the other deterrent in terms of revenue, if they cut back on IRS enforcement, the infinitesimal chances of getting audited would go reduce. And so much of the system is predicated on trust, in a sense, that this is another deterrent. The fact that the chances of being audited are being so reduced as the IRS shrinks.
Yeah, I think everyone on this call is a good citizen and pays your taxes, not because you're under threat of audit, but because it's the law and it's the right thing to do. But there's other people out there, not on this call, who don't see it that way.
Absolutely.
And who might feel that if they can get away with it, they'll do it. So I would love to see a higher audit rate, especially one aided by advances in technology, because AI certainly, artificial intelligence certainly can, if cleverly employed, can tell the IRS where the high impact targets are, what areas of the economy, what types of people, what types of activity are more rife with tax evasion than others. People like you and me that work for a living, we don't have any way to evade taxes. Our employers take it out before we ever get it and report the whole thing to the government. We don't have to be audited. It's the people in cash businesses and large complex organizations that can get away with
independent lawyers.
Yeah.
Yeah.
And I were one once.
Right.
Is it true that the audit rate is about 1.5 or 2% of returns, Martin? Or it's very, very low?
It's very low. In fact, I think 1.5% is an overestimate.
An overestimate.
Yeah. We had at Ollie, we had a speaker come in who was a tax preparer. She was very entertaining, and she, as much as said, do whatever you want because you're not going to get audited. I mean, it was kind of shocking for me to hear, but it's a true statement. You're not going to get audited. It's just very unlikely that you will.
Interesting. And what did she do for the one person who got audited based on what she said?
I hope that she gave back whatever she was paid to do their tax return.
Okay, are there any other comments, questions, input about tax policies, what we've heard from Martin this evening? I'm not seeing any. So let me take post prerogative and tell you about our next CCC program. Keeping with the financial scheme of things, we have John Burton speaking on February 12th. He will be discussing do only the rich have trust? And he'll be talking about key strategies for using trust in your estate planning. I think as you get from the title of his presentation, that it is not only the rich that have trust, and trust can be set up no matter what the income level, and certainly can be helpful for estate planning, but he's the expert on that. So we will look forward to hearing more about that from him. I also want to remind those of you from Georgetown Village, and I think I see the majority of you are from Georgetown Village, that on January 26th, a week from Sunday, we have our annual town hall meeting. Now, this is a really important meeting for us. We ask that the members come in with ideas and thoughts about what we're doing, what we could be doing, what we should be doing, what we shouldn't be doing. We really do want your feedback, and it really has helped us to be able to plan for the year, knowing what you think and being able to use these ideas to better the village. So I encourage you to come. We are serving food, so it'll be a social time afterwards, and we'll be sharing the results of our impact report. You'll get copies of the newest 2025 impact report from what we did in 2024. And if you're unable to make this meeting, we will be doing the presentation part as a hybrid, although we're breaking into discussion groups afterwards. And we will be recording the presentation, and you're welcome to pick up a copy of our newest impact report when you're back in the village square after the meeting. So those are the two big things coming up. In terms of fun things, we do have our trip to Pinstripe coming up on the 29th. We're going to Pinstripes, and that'll be fun and something different, play bocce, share some food, something we can all enjoy together. And movie night is scheduled for January 22nd. We are showing the movie Conclave, so there's still a lot to go. It's a really good movie, and I think it'll be interesting to hear the discussion after the movie. So I hope you'll come in to join us for that. And of course, we are closed on Monday, so your weekly email will be going out on Monday evening, not Sunday evening. So don't think you didn't get it if you don't get it on Monday morning. And that the exercise class resumes on Thursday. Mahjong is not being held on Monday. It's been moved to Tuesday, and all this will be in my weekly email. So thank you for joining us this evening, Martin. Thank you very much for your time, for your knowledge, for your generosity in sharing all this with us. It is much appreciated. And Michael, as always, thank you for helping to arrange these programs for the village.
Well, I thank you.
My pleasure. Thank you, Martin.
Thank you, Martin.
Thank you all, and have a nice evening, everyone. Stay warm.
Bye.